Tech stocks leading the markets lower Monday afternoon. The Nasdaq down more than 1% for the third straight session. Let's get some perspective from a tech expert, Santosh Rao, research director at Manhattan Venture Partners. Welcome, Santosh.
Thank you. Good afternoon.
We have no major tech earnings from the members of the FAANG Club today yet. Those stocks and other tech stocks are down rather sharply. What's behind the downdraft?
Well, this is the after effect of Facebook's earnings and Twitter's earnings. So I think what you're seeing is that these companies were priced for perfection. So any stumbling of any sort will kind of pull them down. So that's what's happening. There's some long-term structural issues for Facebook and Twitter. Twitter is cleaning up. Their user count is going to drop. So all those things. I think it's time to separate the FAANG from these two companies. You need to look at not as a group, but as individual companies. So I think that's where we are. So
well, if you're saying we're going to separate them, I know we've seen huge corrections outside of the FAANG with the Twitter down nearly 20%, Facebook correcting 20%. In one session. You're saying let's separate the FAANGs. So which ones would you keep? Which ones are ones you just toss out?
Sure. So you just saw Google's earnings, which were very good. Microsoft is doing very well. Amazon did a great job. Netflix can still come back. I mean, normally they miss one. They don't miss two in a row. So let's watch their next quarter. But I think these stocks are doing very well. So I think the model is not broken for these companies. There are issues for the other ones, but at the bottom of it, all these companies have long-term structural tailwinds. They're changing lifestyles, they're changing the way we live and do stuff. So I think you'll see them bounce back. This is a time to look at buying on the weakness, not really running away, but let the dust settle and see what happens, because it's not all broken. Everything's not broken yet.
Okay, of the FAANG members, you said, okay, hold Netflix for now, Amazon, Google, or Alphabet. You didn't say Facebook. Forget Facebook for now, drop them?
Yes, Facebook, you need to wait, let the dust settle. There are some issues with the European Union. There are issues with the privacy issues. They need to clean up. People need to have the confidence. And Facebook is not what it was when it started. And people don't go in. It's not the go-to place. Even though they have billions of daily users, people do keep an eye, but they're not that engaged. And that's a big issue, because advertisers need engagement. And with Facebook engagement dropping, but luckily the other the other tools in their basket, the Instagrams and the WhatsApp, they still haven't been monetized fully. So they still have a number of levers to pull. So I think they'll get there ultimately. But right now, we need to wait.
Well, Santosh, the last member of that FAANG group reports tomorrow. That's Apple. What are you looking for in terms of earnings?
Yes. So Apple's product cycle is not what it was before. Apple, the 10 model has been lukewarm. It's very well received in some quarters, but not overall. The mass adoption has not been big. Apple Watch is slowly gaining. So I think it's a good company. Like Warren Buffett said, most of their products are on your dining room table, so it's people use it every day. So it's going to get there. It's not going away. It's become a value play. It always was a value play in terms of valuation. And I think they will report a fairly steady quarter. The expectations are pretty muted. They're not ahead of themselves. So I think they will meet the numbers. Apple is a good stock. We'll see how China, the tariffs and all that plays into their China sales, because that's a big issue. So I think people are going to look for that. Investors are going to wait and see what the after effects of these tariffs, if they kick in.
All right, and lastly, speaking of Asia, Harley Davidson is in the news today. Harley is shifting gears. It's going to focus more on Asia, especially India, and also going after the younger buyer by launching new motorcycles with smaller engines. What do you make of that step that it's taking?
I think it's a step in the right direction. Harley has realized that the big growth ahead is in the international markets, and the smaller bikes for the younger crowd. That's what's popular in the international markets, especially in India, which is their next focus. Bikes do very well in India, so I think they're tapping into that market. I think this is a great move. I mean, they have a number of changes going on, 100 new models, I think. So I think they said that'll really drive close to 2 million more rides and kind of increase their share and market. So I mean, if you saw this quarter, their retail sales dropped about 6%, their market share dropped about 200 basis points. So I think they need to do something. They've realized that. So they're tapping into a market which is huge outside in the international market.
All right, Santosh. So to recap, I guess, step in the right direction for Harley Davidson. As for the FAANGs, hold off on Facebook, pick up the other ones on weekends.
Absolutely. It's not over yet.
All right. Thanks a lot, Santosh.
Thank you.
Our thanks to Santosh Rao of Manhattan Venture Partners. I'm Fred Katayama. This is Reuters.